What's up, you guys? Welcome back to the Average Joe on Money financial channel, and in this video we are talking dividend stocks, but more specifically we are talking high yield dividend stocks that are safe for your portfolio. Now, as many of you guys know, I have a dividend investing portfolio of dividend stocks, of course, with Robinhood, and if you've watched any of my previous videos, you know that the goal of the portfolio is to spin off enough income in 4 years to fund our family's year-long trip around the country in an RV with 4 kids. You guys also know that I'm all about no BS, straight to the point content. So let's go ahead and jump onto my computer screen. Let's go ahead and take a look at some of the data, and let's look at these high yield dividend stocks. First thing I want to start with, as you can see on the screen here, I've got my Excel spreadsheet of dividend stocks. And what I want to start off talking about first is the criteria, the assumptions that are built into these 20 high yield dividend stocks that at this time, based on everything I can see, safe for your portfolio, and I'm going to show you which ones that I own as well. Okay, here's the criteria. High yield dividend stock. What I mean by high yield, I mean at least 6% on the yield as of right now, based on the price as of August 1st of 2020. So it's got to be at least a 6% yield. Additionally, all of the stocks on this list have been paying consecutive and increasing dividends for at least 5 consecutive years. Also, dividend growth rate. At a baseline, we want to see a dividend stock that has a growth rate, how much they are growing the dividend every year, by at least 3%. And the reason for this number is that will match or just barely beat the historical inflation rate, which is around 2 to 3%. Additionally, the biggest factor here is safety, right? I'm talking about safe for your portfolio, and as you're going to see, I own some of these stocks. What do I mean by safe? I mean a dividend payout ratio, or how much of their dividend is paid from their free cash flow. Now, what exactly do I mean by free cash flow? Free cash flow is the money left over, it's profit left over after the business has invested back into, any equipment or facilities, money that's truly left over to pay the dividend or to be distributed out as profits to ownership. At times, company health can be disguised through the use of net income and other accounting tricks. And so free cash flow is a better indicator of the overall health of the business because dividends are paid with cash, not income. Okay, just to recap here, dividend yield minimum 6%, dividend growth rate minimum 3% for the 1, 3, and 5 year growth rates, dividend payout ratio based on free cash flow of less than 50%, which gives me the confidence, and it should give you confidence as well, that there's plenty of money left over at the end of the day to not only pay the dividend, but also continue growing the dividend as well. That's the criteria. I've got 20 dividend stocks here to show you, and as you can see on the screen, we've got stocks here ranging in yield from 6% all the way up to 12.37%. The dividend stocks in yellow are stocks that I already own in my portfolio. So as you can see here, we've got Westlake Chemical Partners, which is the highest yielding dividend stock in my portfolio. We've also got Manulife Financial Corporation that I own, Comerica, Valero Energy, Prudential Financial, Unum Group, and Marathon Petroleum Corporation. All these stocks I own in my own portfolio, and just to prove it, just to show that I'm not just blowing smoke, here, let's go ahead and pop into my portfolio. Scroll down here. So we've got Unum Group right here. We've also got, let me scroll down here, we've got Westlake Chemical right here. I've got $2,000 invested in Westlake Chemical right now, which is 102, just over 102 shares. Also got here Comerica right here. I've got $1,400, $1,477 invested in Comerica. I've also got, where's Manulife? There's Manulife Financial right here. I've got $814 in Manulife. Marathon Petroleum down here, $1,500. So I'm not messing around here. I'm not just telling you things and doing something different. These are stocks that I own in my own portfolio. I live by the same rules I talk about on this channel when it comes to dividend stocks. As you can see here with these dividend stocks, we got a range of different industries, but you'll notice that it's definitely heavily concentrated in financials. That's just the reality here. We've got financial stocks that have higher dividend yields than the others, but we've got energy here with Delek Logistics. We've got Westlake Chemical and Materials. We've got Valero in the energy sector. I own Valero as well. We've also got, and again in the energy sector, Marathon Petroleum, but the others are in the financial sector. I definitely have to be very intentional not to have too many financial stocks in my portfolio. It's ranging about a quarter of my portfolio is financials. As you can see here with all these dividend stocks, there are 20 of them. All of them have a high yield. All of them, as you can see here over here with the 1, 3, and 5 year growth rates, all of them have a dividend growth rate of at least 5%, but some of them have a massive dividend growth rate. Down here you see we've got Key Corp, and they've got a 22%, 27, 22% growth rate over the past 1, 3, and 5 years. Over here we've got First Horizon National Corp, that's got a dividend growth rate of 24, 27, and 22. Below that, Huntington Bank Shares, 21, 26, and 23%. Up here with Hennessy Advisors, we've got 20, 29, and 34. This one right here, Comerica's got massive dividend growth, 41.8%, 44, and 28 over the 3 and the 5 year. But all of these have healthy growth rates for the most part, all of them at least 3%, which is going to match or beat inflation. Now, am I advocating for having all high yield dividend stocks in your portfolio? Not necessarily, but you could probably do just fine with this portfolio. I own about, 35 different holdings in my dividend stock portfolio. Some of them are higher yield, like Westlake Chemical. Others are lower yield. I've got some companies that have been paying dividends for 25, 30, 40, 50 years. Companies like 3M, McDonald's, Johnson & Johnson. So I've got some balance and a blend between high yield and super strong and consistent dividend stocks. But let there be no mistake, I own all dividend stocks that have been paying dividends for at least 5 consecutive years. You don't have to own all of these, but these are all great options. I own half of them almost. You can definitely bump up your dividend yield with some of the dividend stocks from this portfolio. Now is your opportunity here to leave your 2 cents in the comments below. Which dividend stocks did I miss? Which ones do you think I need to add to this portfolio? I'm definitely open to your feedback here. Leave your 2 cents in the comments below. In future videos, we're going to talk about optimum portfolios for dividend growth stocks, companies that are definitely emphasized on high dividend growth over the 1, 3, and 5 year growth rates. And I'm also going to talk to you about a simple way to keep balance in your portfolio and create your own almost dividend exchange traded fund yourself with M1 Finance. So stick around for that in a future video. If you haven't done it yet, hit that subscribe button below and click on the notification bell to be alerted to all of my future videos. Even though we talk a lot about dividend stocks and my Robinhood dividend portfolio, we talk about on this channel all things personal finance that affect people like you and me, the average Joe, whether it's budgeting, paying off debt, investing for your future, and everything in between. That's all I've got for you guys. Make sure to have a great rest of your day. And given this pandemic we're living in right now, make sure to stay healthy both physically and financially. Have a good one.